Very good morning, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to live training session on market profile, order flow, and volume spread analysis. So let's try to understand what happened so far from a top-down perspective, right? So let's me try to pull up the uh, charts over here. Again, we are seeing some sort of an exhaustion. That is what we are seeing here now. I would say like probably the sellers have to be little careful. The reason is like monthly range has been already 1031. Yesterday we've been talking about that. One of the possible range that we can expect bar minimum is the 1000-point range. That 1000-point range has been already done. But we know that the volatility is rising. So 1200, it can be even 1500 also. It doesn't matter. But 1000 is a reasonable range to expect from a monthly perspective. That has been completed today itself. I was expecting maybe for the entire month, but volatility is kind of faster. We know volatility has been rising since the Monday onwards, right? Something has been changed. So I see this as more of an election volatility, right? So which is because it's a seasonal phenomenon. That is how I'm seeing over here. And weekly range, since the week is coming to an end, so you can see that 704-point range. Our bar minimum expectation was like 500. Even yesterday also said like it can be 500, it can be 600, it can be 700, it can be 800 also, because when the volatility is rising, you cannot limit the markets. So the market only has to only do up to this only. Market only have to do that limit only. You cannot limit the markets, right? So that is very important. 704 point, definitely, yeah, with a given volatility, definitely it's a reasonable range to anticipate. Yesterday, we also talked about order flow commitment, momentum commitment, right? So we haven't discussed much about commitment these days, but yesterday we had seen a very strong commitment from the order flow. It's a momentum commitment. So yesterday, if you remember, only the commitment is the only information we carry forward positionally. Yesterday also, we talked about that. This is a range. This is a range. I said like this is going to be acting like a resistance. In fact, it acted like a resistance also. Twice price entered into the zone and then it rejected. Right. So it's a very clean momentum commitment zone. So one single candle, 6,272. Definitely some positioning happened yesterday. Some very big positioning happened. And that is how it become like a momentum commitment. It's a news-based selling. Mostly, I said like mostly some news-based traders, they might have some first-hand information. Now, those are the traders, they are aggressively entering into the markets. Mostly news-based traders, mostly. Do the news-based traders always win? If you ask me, not necessarily, right? So sometimes they might get misleading information also. Sometimes they might be jumping into the news. If sometimes it could be an fake news. Even fake news do enter in CNBC TV 18 or ET now, right? Sometimes it might be fabricated, not by the media channels, but somebody else will fabricate. The news media channels, they think it is a news, so they'll try to deliver it in first hand at times. Sometimes it can be even fabricated by the news channel also. But majority of the time, the fake news are planted elsewhere. And media channels will be talking about that without awaring about that. Without aware that it's a fake news. So their chances are there, like news-based traders even get into a trap also. But if the news is genuine, the news-based traders are the one likely to get a first-hand information on that. So from today's opening, the volume, look at the volume here, 22,010, definitely a highly accelerated volume. Signature of emotions. Is it a zero zone? If you ask me, of course, it's a freak high. So definitely there is no point of thinking like an zero zones over here. It's not a normal zero zones. It's more of a fake tick, right? So, it's a fake tick or not, very easy to identify. You will not see this lot of zeros, huge zeros and only one trade at the day's high. That is mostly an freak high only, right? So usually it's supposed to be a big gap down, and there has been one trade happened at 21,990, right? So it is more of a freak high. So we don't need to give too much importance to that. So does the zero zones will clear? Not necessarily. It may clear, it may not clear. But there is no odds are there like the zero zones always has to go on clear. So what is the overall confidence for the day? Obviously, it's an strong selling confidence. And another question that we've been getting here is like, is yesterday's structure is a poor structure? Yes, we can see this as this is like only two TPOs. Yes, it is an anomaly. Second anomaly, third anomaly, and fourth anomaly. Can this be a potential target? That's another question. So maybe if the context, if the confidence is changing, today opening confidence is like high seller confidence. If the confidence is changing somewhere, maybe those weaker structures we can anticipate. So since the week end target itself almost achieved, first thing I will have is like I don't have any opinion on the markets. Number one thing. Where the market will go, I don't have any idea. But maybe next week I may have an idea. So probably my overall view from a positional point of view, my view is neutral. Number one. Number two, monthly also, I don't have much of a view. Maybe if at all anything much on the downside, maybe another 100 or 200 points. I don't want to go beyond that already. But is there any monthly level? Is there any damage has been done? If you ask me, still the one time framing is there. The one time framing maybe come to an end. So last month low is like how much? 21,798. So we have to see whether if at all the one time framing pattern to remain, the 21,798 should not be broken. I'm not saying like whether it will break or it will not break. I don't have any idea. That's what my point is. But if at all this one time framing pattern to maintain, maybe the 21,798 has to be get a defense. So we need to look for if at all any bottom formation is likely to form over here. If at all, we may have to see some sort of clues. If at all there is any clues that 21,798, if at all if it is not to get breached, if at all this one time framing has to maintain, then we need to see some sort of an bottom formation, some sort of setup. If that setup is happening, yes, we may call for a bottom formation. Let's see if at all any such setups are forming or not. That is what I'm going to observe. So maybe if that might give some clues to look for some long opportunity from an positional point of view. And actually sentiment has been down only, right? So sentiment has been down. Sentiment has been last 4 days, it has been down. Sorry, this is not 4 days, but I have to go to daily. It's been down for last 5 trading sessions. And clean one-sided move, right? Every other day the market has been closing negative. So day 1 close negative, day 2 close negative, day 3 again close negative, day 4 also close negative, day 5 also close negative. Last 5 consecutive days, since last Friday onwards, every other day, it's a negative day. There are sometimes we had seen like 6 days in a row, 7 days in a row also we had seen negative. But things are getting overheated, to be very frank. So I would like to more or less like to maintain neutral. In fact, one of the important swing low, the past swing low also got broken down. So these are the two immediate swing lows. This is the last month low. And there is another low here. These two swing lows is what we have to watch. Not so serious selling around this level is an indication that probably we have to look for a reversal opportunity. As I'm not confirming any reversal yet. What I'm saying is like if at all you want to see any reversal from here, you need some strong clues, right? That is the only context that I'm thinking. So it's Friday, good to go neutral. From an intraday perspective, confidence still remains on the higher side. There is no change in the confidence yet. It is not like price opened and then quick drive. Actually, at a freak tick, price first traded, second time the trade was happening over here, right? So a lot of zero zones is what it had seen. So basically, it's a big gap down only, to be frank. So as of now, we are not seeing any change in confidence. So means that there is not much of a long trading opportunity also, at least not yet. And from the volatility perspective, volatility is jumping to like 14 is the level. Yesterday we seen around 13. Now it is like 14. So going forward, I think probably another 1 or 2 weeks, we may be around 18 plus. I think VIX will be ready to vote, I think. And today election started. So the first phase of poll started. So naturally, around the election results, once election is about to get over or the election results are about to get announced. So 1 week before to that, I think the volatility will peak out. Until then, the expectations will be going crazily. When it comes to the US market, the VIX has been, if you could see the VIX in US market, let me pull up the VIX in US market. Last 4 days, typically the volatility has been kind of peaked out there and then it is declining. So this is India VIX, and whereas US VIX, if you could see, here's US VIX. Last 4 days, it's been declining. 3 days or 4 days. So what I'm saying is like, even if US market VIX is declining, Indian VIX will not decline because it is more of a seasonal phenomenon, irrespective of the market movement. Irrespective of the market movement means market movement can be upper or lower, doesn't matter. The VIX will be keep on rising. Irrespective of whether there is a global tension is there or not, irrespective of whether US market VIX will rise or fall or not, doesn't matter. Indian VIX will be keep on rising towards the election results. And let's also have a look into the exhaustion as well. So this is the entire phase where the exhaustion will not work, particularly in a rising volatility. The exhaustion will not work. Rest all the other phases, exhaustions will work. One of the reasons why you should not give too much importance in a falling market with a increasing volatility. Falling markets, you can give importance, but falling markets in a increasing volatility, you should avoid giving too much importance to the exhaustions. So from that angle, hourly exhaustion still it's there. Probably 15-minute everywhere the exhaustion has to be there, right? So everywhere what I'm seeing is like exhaustions again. Again 15-minute, what we are seeing over here, exhaustions, right? Even last time, the 15-minute exhaustions, many locations it had formed. Nothing got worked out. Now, once again, it is forming. So, exhaustions are once again surfacing on 15-minute time frame and hourly time frame. So, one have to be really careful about that. If at all any bottom formation, chances are there. So, it's good to go neutral rather than thinking that Iran will do this one, Iraq will, Israel will do that fighting. So, market will crash because market had seen any number of wars market had seen. So even Ukraine-Russian war, it has been spoken in the history as one of the biggest war, right? And despite that, market came to an all-time high. And then followed by that, we had even seen the war situations like Israel and Palestine, right? So again, market after not even market bothered about that, and market came to an high. And with this current crash, we don't even know whether the market crashed because of the Israel and Iran tensions. That is how we naturally attribute. So we don't have any other clues. So we naturally attribute to, yes, it happened because of Israel and Iran war. But this also will be a fad, right? At some point in time, again, Nifty will be hitting an all-time high. So the thing here is like, my point here is exhaustions are once again surfacing. Maybe this exhaustion, you have to give too much importance. Trying to hold positionally, there could be a serious risk. Yes, at this point in time, strong sellers are there. If at all confidence is changing, that could be an indication that the sellers are not serious. Maybe something different is what we have to think. So exhaustions on Harley, 15-minute, 5-minute, even 5-minute also, if you would have opened, definitely exhaustions would be there. So kind of place to go neutral on positional shots. Do I spotted a bottom? Not yet, right? But do I see a threat on shots? Yes, definitely. Positional shots, not the intraday one, but intraday still there is no clues at all. Intraday also, even the 5-minute time frame, if I could have seen that, I've been seeing exhaustions only. So exhaustions, price is getting out of the exhaustions now. So volume wise, if I could see that volume activity has been still steady. Still market has been keep going sideways. Huge cluster activity has been there. Cluster has been already broken on the upper side. So cluster trade is in progress. Cluster is already showing that it's a long trading opportunity. And moreover, the day low also we are able to see like a trapped seller is what we are able to see, right? So trapped seller at 925 candle itself. So Sudhir is having a question. Yes,
Hello, sir.
yes.
Sir, in Bank Nifty, 940 candle, is it a thin volume candle or what? 940 candle.
I think there is some big volume is there.
Oh,
668.
only one, except that everything is thin in volumes.
Yeah, then
Okay,
it will not be thin volume candle. It cannot be thin volume candle.
okay, okay.
Even if one volume is there also, it is not a thin volume candle.
Okay, sir, fine.
Yeah. I think more or less the same thing is what we would be able to see from even in Bank Nifty also, more or less. Let's see Bank Nifty, what had changed. Let's have a quick check on that. Same exhaustion at the open. 5-minute we had an exhaustion. 15-minute also we had the exhaustion. Hourly also we are seeing the exhaustion here. So exhaustion is there in Nifty also, Bank Nifty also. Even from a Bank Nifty perspective, let's say if I could see in Bank Nifty, even in this case also, the one time framing is there for the last 4 months. The one time framing is there, right? So if in case the markets are one time framing, if investors are really serious about that, if that all the selling is temporary, and naturally a very good location to look for a pullback. And one more thing, whenever the markets are bottoming out, we will be seeing some sort of a smart commitment from order flow. Smart commitments are like we'll be seeing some sort of a bigger players coming and positioning at the very bottom. But naturally, that will happen when volatility collapses. So we will be able to get a lot of clues. Usually, If it's a regular market, I would have been anticipating some sort of a volatility collapse first, or some sort of a smart money commitment to happen. But here we cannot get clues on volatility. The reason is we are in election season, so volatility will not be able to get some double confirmation. In other cases, what will happen? Usually positioning will be happening. Smart money positioning will be happening. Let's say today, if there is any smart money positioning, and that band will be acting like a support zone, positional support zone. So very easily we'll be able to spot such kind of smart money commitment. Usually smart money commitment will be able to figure out whether the bottom has been formed or not, right? From an order flow perspective, that's the only thing that we carry forward positionally. Positionally, what we carry forward in order flow, the commitments, volume commitments, smart money commitments. That's the only information we carry forward positionally. So probably today we have to see if at all there is any smart money commitment is happening or not. Should I have to go and take a long here? Of course, no. What I'm saying is like you have to look for more data points, more confirming data points saying that the market is reversing, or maybe more confirming data points that confidence is changing intraday. Maybe that could be a game changer for a long trading opportunity, or maybe something saying like inventory is getting short to too short, something like that, or maybe some sort of bottom formation setups in our upcoming days. Maybe not today itself. Maybe Monday you may get a clue that maybe a G2 low on Monday, and sentiment turns positive on coming Tuesday. Maybe those could be an add-on confirmation point that the market is bottoming out. If at all the market is bottoming out, maybe this is a very good location to look for the markets to bottom out. So from Bank Nifty point of view, already B period would have started. In fact, Bank Nifty had a double distribution, right? So there is a reasonable single prints in yesterday's case. The one time frame continued, the 40% got into the play. Even though Nifty yesterday, it was very tricky, but Bank Nifty right from the start, the 40% breakout failure, and then the 40% rule got played out. Not only in Nifty, including ICICI Bank also, the 40% rule, it turns out to be a breakout failure. The breakout failure got played down till end of the day, right? It got played out. Okay, so one thing to notice over here. So there has been a visual reference level. Yesterday's high is also a dominant selling, right? So kind of a temporary selling pressure. That is what we had seen. So I'm going to call that as a dominant selling. That's a weaker reference, by the way. Dominant selling. So this failed auction haven't cleared at all. There has been an attempt, but this attempt has been failed, and probably this particular day also we had at least some positive clue, but that has been totally damaged with the day. The moment 15th April, there has been a gap down that totally changed the structure, saying that a failed auction may not clear at all. Maybe we have to reverse the course to shorts. So this entire downtrending, this is the only visual reference level that we have. Not much of a visual reference level though. So one thing we have to severely practice, not to expect much downside opportunity, or try to have a little, very little expectation on the downside opportunity, right? So if at all any reversal, one should be flexible enough to trade the trend reversal also. So that is the only context one have to prepare here. But I'm seeing a lot of risk in holding positional shorts at this point in time. So there is talking about volume cluster zone in Nifty. Yes, already that has been a long opportunity. I already talked about that. So that has been already the bar, 925 bar itself, that has been an big volume cluster. So high volatile day. So naturally volume cluster, we have to give importance to that. So usually with this given volatility, maybe 75 points will be the trading opportunity. A low volatile market will be taking 50 points from this level. Since we are in a high volatile phase, probably 21,880 plus 75, right? Roughly approximately 921,955 will be the expected reference on the upper side, because we are seeing in high volatile markets. High volatile markets, naturally volume cluster has to be given importance. Low volatile markets are particularly when the volatility is very compressed, confidence is not serious. In that case, volume cluster, we should not give too much of an importance. Bank Nifty already sellers are not serious, right? Price open, got down, and it's getting back into the range. Again, some more confidence need to be monitored here. Is it a weaker reference? I don't think it's a weaker reference. So price entered into the range, just 2 TPO and then rejected. Still, value area is likely to form lower, that we know that. The question here is, will there be any chance the price will be able to get back up? And since price would have broken multiple week lows, we also have to be checking end of the week. Is there any chance of multi-week breakout failure or something like that? We have to see that. So far, if I could check the Bank Nifty low from here, 46805. And again, this low is like, this low here is 46610. This low is like 46611. That means very close. It's not a multi-week breakout failure. Just one TPO difference is there. Is it a weaker reference? If you ask me, we don't see this kind of weaker references. We don't see like 3 weeks back low and today's low is exactly same. We don't see that as a visual reference level, first of all, right? Almost this week, right? Bank Nifty had made 1,838 points range. That's something phenomenal. Usually it doesn't happens like this very often. Nitesh Shah is asking what these numbers signifies of turbo RSI. Probably from the turbo RSI perspective, I don't see that the number signifies anything. The number we don't use as an overbought or oversold kind of levels, right? So it is, I use either it is an increasing mode or declining mode. I don't bother about what these numbers indicates. Is it an overbought, oversold? I don't use this, even though I had given some certain levels are there. The behavior is not meant to detect overbought or oversold. The behavior is to check whether the short-term trend is immediately down or up. That is the only question Turbo or RSA answers, nothing else. So these 80 and minus 80 are given only from a fancy point of view, nothing much. There is no indication that it is overbought or oversold. So again, Chaitra is having the question, in Nifty order flow, is today's first candle an exhaustion bar? So even in yesterday also I clarified that an exhaustion bar cannot be the first day of the bar. First day of the bar, we cannot say whether it's a fresh day high or a fresh day low. We can see this as a fresh day high also. We can see that as a fresh day low also. So first bar cannot be a exhaustion bar, right? So, and first bar we cannot call it as a fresh day high or fresh day low also. First bar we cannot see trapped buyer, trapped seller also. But today's second bar, we can definitely say like there has been, it is not just volume cluster breakup, it is also like trapped seller also. So second bar onwards, we can call that as a trapped seller. Can I call that first bar like exhaustion bar? Definitely no, we cannot. Either way, it's a long intra-bar, intraday long opportunity only, right? So well, let it be a volume cluster or let it be a trapped seller. It's a simple long trading opportunity only. And in fact, there has been tomorrow morning, like so we are doing a two-part series on price action versus order flow. If in case we are really curious to learn about combining price action with order flow, then you can consider attending this. So price action versus order flow. It's a two-part series, mostly basics, right? So basics of price action, basics of order flow. That is what you can anticipate. But a lot of comparison will be there between price action and order flow. Institutional order flow, that kind of context we will be talking about that. So maybe if you are really curious, you can consider attending the session. How the institutional order flow happens, price action, how it sees, from order flow, how we see this information. So do gap rejection strategy applies or what one can think in Bank Nifty? So if it is a gap rejection strategy, right, we'll be seeing a fast rejection from there. Definitely in that case, yes, it can be a valid gap rejection. So maybe if the auction is turning negative, let's say the A and B is now up in case of Bank Nifty, right? A and B is now up in case of Bank Nifty. If maybe the B period is breaking down, B period low is breaking down, or C period is becoming like an inside bar, C period low is breaking down, still you see the same rejection, then it is valid. So even if in case yesterday, we know that it is a gap rejection, right? But when we know that, that is the question here. G period, we had the gap would have been got formed and then it rejected. But when the auction turned down, if you could see that the H period was like an inside bar, right? H period like an inside bar. G period rejection was still holding on. I period broken down. So the auction, when it is turning down and still you are seeing that gap rejection, then it becomes like a gap rejection trade. But very valid question, what you had asked. Just like that, you're just seeing a gap rejection. It is not an gap rejection, right? You have to see the auction direction. Visibly, you have to see that auction is clearly turning down. Current auction direction has to change down, and you should see that that is where you can use that as an reference to look for a shorting opportunity. So if you want to take a similar decision in Bank Nifty today, you should have waited for the auction to turn down. Right now, what is the auction direction in case of Bank Nifty? Right now, auction direction is clearly letter A and B is clearly on the upper direction, right? So maybe if the C period, let's say C period is becoming like an inside bar, or maybe the D period low is taken down. In that case, still you see the gap rejection. Yes, so far is it like a gap rejection? Yes, it is so far looking like a gap rejection only, undoubtedly. But if the auction direction is turning down, then yes, gap rejection will come into the play. Not until then. Sometimes what will happen, C period also will continue like a one-time framing. So in that case, there won't be any gap rejection at all. So what is the target or VC zone? There's a question from Sudhir. So probably if you're talking about the VC zone target in case of Nifty, the expected target should be like around, as I said, typically usually 50 points, but since we are seeing an elevated market opportunity, it should be like 75 points. We have to keep like 75 points on the higher side. Which means somewhere around 21,955. That's the expected upside reference. And let's see what banks are doing. ICICI Bank sellers are not serious. Sellers show down, but they are not serious. Even HDFC Bank also, I think, looks like a multi-day breakout failure it is. Multi-day breakout failure, prices rising back up towards exactly to the midline. Price is exactly touching the midline here. Weaker reference. So C period also started. And in fee, yesterday there has been an result. I think more or less the big gap down could be because of in fee only, because there has been a reasonable gap down. I haven't gone through the details of what Infi had done, but yesterday Infi, I think around evening, the result got announced. And likely ICICI this week will be going for results. And the Reliance, I think mostly on 24th, I think. 24th means, I'm not sure when exactly the results, but I think around 24, I think. April 22, that means Monday, I think. Monday, right? So Monday is there. So when more big companies are coming up with an announcement, like ICICI, the ICICI mostly in the weekends, Saturday, and Reliance on Monday, most likely Monday evening, I think. Oh, unfortunately, we don't have Reliance chart. Let me try to pull Reliance chart also. This is how the Reliance has been topped out with a poor high at a major swing high. But is it just a poor high if you ask me? It's poor high with a weak high. So means probably any decline from here, it could be a very reasonable short-term investment bets in Reliance also. The high is not secured, means one more all-time high is likely to happen. Is it an all-time high? Yeah, it's around all-time high. All-time high is not that um, secure yet. It's whatever the selling, what happened is like kind of a dominant selling only, temporary selling pressure, inventory getting long to too long. That's what it happened around 28th March itself. It happened with a poor high, with an again another dominant selling exactly from the reference levels. So followed by that again a bunch of uh, one more uncleared poor high. Even today's high also it is visual. Kind of a temporary selling pressure. G to low is there. G to low, obviously, one of the potential targets. Sentiment would have been negative in case of Reliance. Yesterday, value was building higher, but we know that even in Nifty also, if you would have seen that, we've been clear saying that value area is higher. Yesterday, if you would have seen that, yesterday's value area was higher. Right? Did we consider as an acceptance yesterday? No. Right? Even though we know that value area is higher, there is a G to low formation was almost morning itself we had concluded that there is going to be a G to low. Either if the same day itself collapses, end of the day we will not be seeing a G to low. Even if the G to low levels are not getting touched, maybe today it would have been done. That is the context that we had taken, right? So in fact, even though morning we had a hunch of a G to low, the same day itself got a clearance. So Nifty, it haven't formed any G to low. about Bank Nifty. Bank Nifty still it is one time framing. ABC still it's holding on. So still there is no clarity about whether it is going to be an gap rejection or not. Still CPID is more or less trading like an inside bar. And rising volatility is the only phase where option buyers they make fast money, right? Irrespective of the direction. It can be on the downside also, even it can be on the upper side also. But I can tell you one thing that definitely a lot of visual reference level you would have seen, not only in Nifty, not only in Bank Nifty, many stocks like HDFC Bank, Reliance, many places we had witnessed the poor highs, poor lows, visual reference level around the midday, halfback levels, many visual reference level are like around like RP kind of structure. Right, so it's a universal phenomenon. It's not only limited only to Nifty, Bank Nifty. If you go back and see in US market, you would have seen similar phenomena there also. All right, so let me pass here. I think there is one more question. Yesterday's value area, high value area, low point of control, do you use in today's analysis? See, we'll be relatively monitoring compared to yesterday's value area, where is today's value area? But it is not part of the strategy, it is part of the observation, right? So where the value area is forming, definitely we should know about it. Yesterday, if you would have seen that, there has been an observation saying that even though market is trading negative, value area is likely to form higher. I mean, even though value area is likely to form higher, market can go negative, or positionally market can go negative. That is the view that we had yesterday. Today, we know that value area is likely to form down. But despite that, we are still seeing a risk on the opposite direction. That the risk is there. But value area is not an strategy. It's part of the observation of market profile. We don't have any strategies based on value area. All right. So let me pass here. We'll come back in the second half and we'll discuss more about it. Thank you.